Welcome to Investment News Roundup. Here, you'll see the headline and insight on screen, while the voiceover gives you the summary of the news. We use advanced data science, machine learning, and AI to analyze past trends and deliver insights that can help guide your investment decisions. Let's get into today's news. The Indian government plans to extend the UDAN scheme, meant to boost regional air connectivity, for another decade, announced Civil Aviation Minister K. Ram Mohan Naidu. Running successfully, UDAN has operationalized 601 routes and 71 airports so far, resulting in job creation and bolstering tourism. With this extension, the government's goal is to bump up the numbers to 350 to 400 operational airports by the country's centenary year, 2047. This effort aims at enhancing domestic travel and connectivity, proliferating job opportunities in the aviation sector, and facilitating the growth of tourism. Enhanced regional air connectivity and increased job opportunities can potentially boost aviation and tourism sectors, positively impacting related investments. Jeff Bezos-owned Kuiper has expressed concerns over the expensive airwaves in India, which could potentially force global satellite internet providers to focus their services primarily in urban areas of the country, straying from their initial mission of providing connectivity in remote regions. Starlink, in its response, emphasized that satellite service spectrum should be a shared resource and therefore not auctioned. This stands against the demands of India's largest telecom provider, Reliance Jio, controlled by billionaire Mukesh Ambani, who favors an auction. Investors should gauge the impact of higher spectrum costs on satellite connectivity businesses' profit margin. Non-banking financial company, Endel Money, has launched its fifth public issue of secured non-convertible debentures, NCDs, proposing a base amount of 75 crore rupees alongside an option to maintain oversubscription to an equal amount, bringing it to a potential total of 150 crore rupees. The issuance promises attractive coupon yields, reaching up to 13.44% per annum. The raised capital will be dedicated to various objectives such as lending, financing, and miscellaneous corporate purposes. Endel Money's proactive initiative to augment their finance reflects their commitment towards business expansion and enhanced operational activities. With high-yield NCDs, long-term investors can diversify their portfolio while potentially benefiting from attractive returns. Jubilant Bhatia Group's promoters, Shyam and Hari Bhatia, are in negotiations with asset managers and banks to gather 12,500 crore rupees, $1.7 billion, for a 40% stake purchase in Hindustan Coca-Cola Beverages. Entities reportedly involved in these discussions include Apollo, Ares, Bain, and Kotak. The Bhatiyas are considering 3 to 5 year debt options from mutual funds to back this significant investment. This move signals their intention to explore new avenues of the Indian beverage market and diversify their business portfolio. A successful acquisition may diversify Jubilant Bhatia Group and improve its stability, potentially making it a beneficial long-term investment. India's ambitious target to achieve 500 gigawatts (GW) of renewable energy by 2030 may lead to an increased solar equipment import bill of around $30 billion annually and greater reliance on China. To avoid excessive costs and dependence on imports, it is imperative for India to boost local manufacturing, especially in the production of polysilicon and solar modules. This strategy could vitalize India's economy through job creation and the development of new industries, in addition to enabling the country to control its renewable energy destiny. Opportunities may arise from India's need to broaden its local renewable energy manufacturing capabilities. During the Navratri Dashehra period, motorcycle and scooter sales witnessed a significant boost, primarily fueled by robust rural demand. This surge is due to several factors, including a beneficial monsoon season, productive agricultural output, government allowances, along with hikes in minimum support prices (MSP) for crops. Owing to these favorable circumstances, companies anticipate their sales approaching or exceeding pre-pandemic levels while maintaining strong momentum as we move into the next fiscal year. Such trends offer an optimistic outlook for the two-wheeler automotive industry in rural India amidst these challenging times. Strengthening rural demand signifies recovering consumer sentiment, which may boost the growth of companies reliant on rural sales. Oberoi Realty experienced significant success within mere days of launching their 75-acre Oberoi Garden City Thane project. The project, featuring luxury residential towers, state-of-the-art amenities, a JW Marriott Hotel, and an Oberoi International School, managed to sell homes worth a staggering 1,348 crore rupees during its first 3 days on the market. This milestone is indicative of a robust demand for luxury real estate in India. The first phase of the project includes a total of 5 residential towers, which have attracted a massive influx of buyers in a remarkably short span of time. This sale reflects a strong luxury real estate market, potentially signaling continued growth for Oberoi Realty and the sector. Acme Solar Holdings, via its special purpose vehicle Acme Platinum Urja, has entered into a power purchase agreement with the Solar Energy Corporation of India. The deal involves Acme supplying power from its 150 megawatts hybrid solar capacity. The power channeling project will connect to the Tumkur 2 substation in the state of Karnataka. This development is part of Acme Solar's unfolding corporate strategy, as the company is also in the stages of planning an initial public offering (IPO). The transition to renewable energy and the signed agreement presents a strategic move for Acme in consolidating their position within the Indian solar market. Acme's strategic power deal and planned IPO could offer growth potential for long-term investors. India's renewable energy industry is on the brink of a significant talent deficit. There is a skills gap of approximately 1.2 million, obstructing progress in the rapidly growing sector. Yet, opportunities abound, as major corporations plan to expand, potentially bringing about 1.7 million new jobs over the next 3 years. Industry experts urge an immediate response to deal with this crisis. Emphasis should be placed on reskilling existing workers and boosting apprenticeship programs to align with the increasing workforce demands and take full advantage of the blooming sector. This news points to promising growth and potential investment opportunities in the Indian renewable energy sector. Zee Entertainment Enterprises is seeking a settlement with Securities and Exchange Board of India, SEBI, over an ongoing probe into alleged financial misconduct and governance malpractices. The media and entertainment company proposes to terminate the investigation by either paying a penalty or implementing corrective measures. This move is centered around preserving investor trust, even as Zee avoids admitting or refuting the charges raised against them. The objective of this strategy is to regain normalcy and mitigate financial and reputational damage from the ongoing investigations by SEBI. Investors should watch Zee's management actions post-settlement. It may impact long-term financial stability and governance. The Department of Telecommunications, DOT, is urging for leniency on Environment Ministry regulations relating to 4G tower setup in secluded and forested regions. The suggested modifications entail easing the stipulations for district magistrate affirmations, the provision of call records, as well as alternative schemes concerning vehicle movement and power sources. By opting for such changes, the DOT aims to extend the speed and reach of the 4G coverage in these areas, which are currently underserved. For investors in telecom sector, regulatory relaxations could expedite network expansion, potentially driving subscriber growth and revenues. Baba Kalyani, a prominent figure in the Indian business community, made a clarion call for technological innovation from within the country rather than reliance on technology adopted from abroad. Kalyani believes India's development into a technology leader could result in products that inspire Western imitation. His remark underlined a shift from traditional tech consumption to a model emphasizing indigenous creation and innovation. He emphasized the necessity for India to develop its own technological solutions and products, fostering an environment of innovation that propulsion the nation and its economy forward. For long-term investors, this highlights potential growth in India's tech sector and the opportunities for novel tech investment. The Indian government's recent move to cut domestic gas supplies by up to 20% for city retailers is expected to push up the price of compressed natural gas, CNG, by Rs 4 to 6 per kilogram. This strategic decision is expected to significantly affect consumers, particularly in politically strategic markets such as Mumbai and Delhi. To mitigate some of the impact, the government might contemplate reducing the excise duty. This fiscal measure might be considered in light of the impending elections in these critical CNG markets, possibly with the motive of retaining the voter base's support and handling consumer sentiment effectively. Investors in energy sectors may monitor regulatory decisions and market reactions, as this could impact profitability. India's burgeoning biotech sector, valued at $150 billion, is a wellspring of potential, albeit largely untapped. With innovation and product development capabilities still underexplored, the Biotechnology Industry Research Assistance Council, BIRAC, supports the enhancement of this bioeconomy through increasing startup growth and research and development investment. Yet, for India to ascend to a position of global biotech leadership, it requires amplified private sector investment and a refining of its regulatory processes. This bolstering of internal and external investment, combined with a reimagined regulatory framework, could unlock the full potential of India's biotech sector, accelerating its impact on a global scale. Increasing private investment in India's biotech sector could fetch substantial returns due to the immense untapped potential. Ada Poonawalla, CEO of Serum Institute of India and billionaire businessman, is venturing into the entertainment industry with an investment of 1,000 crore rupees to secure a 50% stake in Dharma Production and Dharmatic Entertainment. The investment is part of a strategic partnership aimed at leveraging Poonawalla's vast financial resources to reach increasingly digital and globally oriented consumers. Poonawalla will use this partnership to fuel the expansion of content offerings on global platforms, creating substantial opportunities within the digital consumer market space. This partnership diversifies Poonawalla's portfolio, indicating potential growth in the digital entertainment sector. India's Telecom Regulatory Authority of India, TRAI, has extended the timeline for feedback on the pricing methodologies for satellite spectrum allocation, in light of requests from major global players like Starlink and Amazon Kuiper. The companies are insisting on reasonable pricing to effectively compete with Indian telecom bigwigs like Jio and Airtel. This extension comes amidst heightened market enthusiasm over satellite broadband services, especially in areas with limited terrestrial connectivity. The demand for equitable pricing underlines the value and potential returns from this new age technology and the significant market interest this sector is attracting. Potential changes in spectrum pricing could impact future profitability of companies like Starlink, Amazon Kuiper, Jio, and Airtel. Reliance Infrastructure's shareholders have given a green light to a plan that will see the company raise 6,000 crore rupees through share issuance and qualified institutional placement. In the first phase of this major capital increase, the company expects to generate 3,014 crore rupees. Major financial entities and the company's own promoters are set to be the primary investors. The capital influx is slated to bolster financial resources of the company and promote strategic growth initiatives. This capital raise indicates strong growth plans, hence it's a positive signal for long-term investors. Alembic Pharmaceuticals has won final approval from the US Food and Drug Administration, US FDA, for its generic version of diltiazem hydrochloride extended-release capsules. Marketed in doses of 120 mg, 180 mg, and 240 mg, these capsules are intended for the treatment of hypertension and chronic stable angina. They are therapeutically equivalent to Dilicor XR, a drug produced by Allergan Sales LLC. These generic capsules have the potential to capture significant share in a market estimated to be worth $28 2 million. This approval represents a new potential revenue stream and growth prospects for Alembic Pharmaceuticals. Approval of Alembic's generic capsules presents an opportunity for revenue growth in a sizable market. India is contemplating a halt to the installation of new flue gas desulfurization (FGD) units in its public sector coal-based power plants, following a CSIR NERI study that has deduced sulfur dioxide emissions from these facilities do not have a significant impact on the ambient air quality. The core intention of the proposed measure is to optimize cost structures associated with power generation. The move, if adopted, would signify a notable breakaway from the ongoing deployment pattern of FGD installations, which are pivotal measures in limiting sulfur emissions and hence, traditionally regarded necessary for environmental protection. Positive for investors in Indian coal-based power companies, potentially leading to cost saving by avoiding new FGD installations. Allied Blenders and Distillers Limited, ABDL, has forged a strategic partnership with Roust Corporation, laying groundwork for the introduction of Russian standard vodka in India. With the burgeoning Indian vodka market in sight, this collaboration aims to merge ABDL's robust distribution and marketing capabilities with Roust's high-grade vodka offerings. India's booming consumer base presents a ripe opportunity for both entities to make significant inroads in the country's alcohol market. By utilizing Roust's superior vodka portfolio, ABDL aims to cater to the discerning preferences of Indian consumers, potentially allowing them to carve out a considerable market share. The collaboration allows ABDL to diversify its offerings, innovatively targeting a growing market, presenting potential profitability for long-term investors. The Uttar Pradesh (UP) government has given the nod for an expansive master plan to develop New Noida and an aviation hub surrounding the Noida airport over the next 15 years. The comprehensive scheme entails acquiring lands from multiple villages and fostering the growth of residential, industrial, and green spaces. This widespread development also includes the establishment of aviation-related industries to bolster the area's economic backbone. Anticipated population expansions have also been planned for, suggesting an extensive, long-term economic boost for the region. This development signals potential investment opportunities in real estate, infrastructure, and aviation-related industries in the Noida region. In the second quarter of FY25, telecom giant Reliance Jio saw a substantial reduction in its customer base, losing around 11 million users. The customer loss was majorly due to tariff hikes and SIM consolidation, which reflected in a lower than forecasted EBITDA. Despite this setback, the company managed to maintain its ARPU, mainly because of an encouraging uptake of its 5G-based home broadband services. Market analysts view this as a potentially revenue-driving segment for the company and predict noticeable growth in it going forward, countering the adverse effects of the recent customer losses. With growth forecast for its 5G services, Reliance Jio's temporary setback could represent an opportune investment moment. Vedanta Group's proposal for oil exploration in the eco-sensitive area of Hollongepa Gibbon Wildlife Sanctuary has been put on hold. The National Board for Wildlife has deferred its approval due to concerns related to environmental impact. A joint inquiry by the Assam Forest Department along with other wildlife authorities is slated to take place. The inspection will involve a detailed assessment of the situation following apprehensions about the potential adverse effect on the sanctuary's ecosystem. Local MP Gaurav Gogoi has underscored the necessity of comprehensive evaluation before rendering a decision that could potentially harm the wildlife sanctuary's natural habitat and biodiversity. Investors in Vedanta Group should anticipate potential delays and increased regulation scrutiny in its oil exploration projects. Revenue for Indian apparel exporters is expected to increase by 9 to 11% in FY25, spearheaded by enhanced inventory liquidation and a global sourcing shift towards India. This surge also owes to the supportive measures introduced by the government, which include production-linked incentives and propositions for free trade agreements. Further contributing to the positive outlook, capital expenditure, CapEx, is anticipated to rise, providing a buttress for exporters over the coming years. This confluence of improved liquidity, favorable government stipulations, and rising CapEx propositions a promising scope for the growth of Indian apparel exporters. This news suggests considerable growth for Indian apparel exporters, presenting potential investment opportunities in this sector. India's burgeoning renewable energy sector, featuring companies such as Tata, Adani, and Mahindra, is up against a massive skills gap of 1.2 million. As these corporations continue to aggressively expand their renewable energy portfolios comprising solar, wind, and other forms of sustainable energy, the demand for a skilled workforce in this sector is skyrocketing. This escalating demand necessitates rapid reskilling and upskilling initiatives to fill the talent deficit. Addressing the severe human capital issues becomes crucial for driving growth in this sector, gaining a competitive edge, and contributing to India's ambitious renewable energy targets. Investors can consider backing reskilling, upskilling initiatives in India's renewable sector for potential long-term growth. Telecom operators in India, led by the Cellular Operators Association of India, (COI), are in a debate concerning revenue sharing with over-the-top (OTT) service providers. This debate has been spurred by insufficient earnings from the surge in data consumption. The argument put forth by the telcos is that dominant OTT entities should share a part of their revenue to aid in network maintenance and funding for 5G technology innovations. However, an exception would be made for startups and smaller companies, with the aim of promoting and encouraging further innovation in the OTT space. This policy debate could impact telcos and OTT platforms' profitability, impacting potential investment in these sectors. Institutional investments in India's real estate market skyrocketed 31% year, reaching $61 billion for the period between January to September 2024, prompted by solid GDP growth and strong consumer demand. Despite a 69% drop from Q2, Chennai emerged as the foremost destination for these investments. The third quarter saw a significant uptick, with investments soaring by 41%. The increase in investment is reflective of India's vibrant economy marked by an impressive GDP growth and a robust consumer base ready to spend. This surge underlines the ongoing interest in India's real estate sector, indicating its increasing appeal to institutional investors. Robust demand and strong GDP growth point to potential investment opportunities in India's real estate sector. Shareholders of Reliance Infrastructure have greenlit a scheme to boost company funds through a 6,000 crore rupees raise via preferential issue and qualified institutional placement (QIP). The first funding round, amounting to 3,014 crore rupees, will witness substantial investments from the firm's promoters and two Mumbai-based businesses. This fundraise move will not only enhance the corporation's net worth but will also facilitate its expansion in sectors displaying high growth potential. The capital injection signifies a significant forward leap for Reliance Infrastructure as they seek to fortify their financial footing and drive growth in their target markets. This capital raise could strengthen Reliance Infrastructure's financial health, potentially enhancing long-term investment returns. Civil Aviation Minister, Ram Mohan Naidu, has outlined intentions to classify hoax threats against airlines as a cognizable offense in India. This follows a rampant increase of over 70 bomb threats reported in just 1 week. The initiative is part of a broader government strategy to enhance aviation safety, which includes amendments to aviation safety legislation. In a significant move, hoax callers are planned to be added to a no-fly list as part of the new security measures. These measures signal a concerted effort by the Indian government to crack down on threats to its expanding aviation sector. This tighter security regulation could potentially boost airlines' reputation and customer confidence, impacting investment perspectives favorably. Borosil, a leading provider of glassware, laboratory equipment, and solar glass, sets out to double its revenue to 7,000 crore rupees within 4 years. The anticipated growth is primarily derived from the expansion in its key sectors. The company's strategic move includes the establishment of a new plant in Gujarat and sizable investments in Jaipur. Additionally, Borosil intends to support the revenue growth by venturing into steel bottle production. Despite fierce competition from Chinese firms, Borosil Renewables, a subsidiary of the parent company, expresses a confident outlook for future expansion and growth. For long-term investors, Borosil's ambitious expansion plan signifies potential strong growth and diversification opportunities. Reliance Industries is taking steps to integrate its media entities through its forthcoming merger with Star India and Viacom18, opting to maintain Disney Plus Hotstar as its central streaming platform. Reliance's proprietary platform, JioCinema, will be absorbed into Disney Plus Hotstar, leveraging the latter's advanced technical setup. The post-merger arrangement will result in one of the largest media conglomerates with control over 100 channels and 2 significant streaming services. This strategic consolidation aims to establish not just extensive media reach but also a robust technology infrastructure, underpinning the future growth of the company in the entertainment sector. Long-term investors may find opportunities in Reliance as it expands its media portfolio and strengthens its digital assets. Tire manufacturer SEAT anticipates a easing off of high raw material prices during the latter half of the fiscal year, as domestic natural rubber prices touch a 15-year peak. On a positive note, the company predicts expansion of its aftermarket business, along with enhanced performance in its international division. This optimism stems from an expected increase in container availability and a decrease in once soaring freight costs. Thus, the company looks forward to an alleviating raw material expense burden and robust growth in key sectors, paving the way for a stronger financial performance in the months ahead. For long-term investors, this indicates potential improved financials for SEAT due to lowered costs and projected growth in key sectors. India's private credit market is experiencing rapid growth fueled by local participants, inciting concerns over potentially diminished lending standards. Industry specialists are spotlighting these potential risks, while regulators are countering with the resilience of the sector. Despite these challenges, experts maintain a positive long-term outlook for the market as the interest from investors continues to surge. It underscores the need for vigilant oversight and robust safeguards, but also acknowledges the potential for robust growth and return on investment. Balancing these potential benefits and risks is key to the future sustainability of India's expanding private credit market. Increased diligence may be necessary for investors focusing on India's credit market due to potential risks related to weakened lending standards. PhonePe, the digital payments platform, managed to reduce its customer support staff by 60% in the past 5 years through enhanced automation. The introduction of AI-driven chatbots has allowed the company to resolve over 90% of the customer issues, despite a 40-fold spike in transactions in the same period. Notably, this efficiency drive has paved the way for PhonePe to achieve profitability, even amidst legislative hurdles like the Zero MDR law and the operational challenges brought about by the COVID-19 pandemic. Phonepe's move to automation and AI for cost efficiency shows potential for scalability and profitability, a positive indicator for long-term investors. The National Company Law Tribunal, NCLT, has dismissed an application filed by REC Limited against Global Metal Energy Private Limited pertaining to insolvency proceedings. The judgment was pronounced, taking into consideration that the company's default triggered during the COVID-19 timeframe. During this period, insolvency proceedings were not permissible. This precedent-setting decision throws light on the fact that lenders are unable to alter the default date through fresh notifications once the prohibition period has elapsed. Investors should consider the increased risk of default during crisis periods and its potential impacts on lenders' rights. The group of ministers, GOM, is considering recommending an exemption of goods and services tax, GST, on term life insurance and health insurance premiums for senior citizens in India. They have proposed to exempt GST on health insurance up to 5 lakh rupees for non-senior individuals, with premiums above that level attracting the standard GST rate of 18%. Presently, an 18% GST is levied on life insurance premiums without any consideration of the insured's age. The intention behind this proposal is to make insurance more affordable for senior citizens. Insurance companies might see increased policy subscriptions from senior citizens if this proposal is enacted. Major consumer goods manufacturers, including Parle, Dabur, and Tata Consumer, are noting a revival in demand from rural areas even as urban areas wrestle with food inflation stalling economic growth. Rural demand for essentials has somewhat stabilized, painting a contrasting picture compared to cities. However, urban demand remains pressured due to elevated prices of key commodities such as tea, coffee, wheat, and copra. This trend underscores a continued divergence in consumption patterns in India's rural and urban markets, driven by differing economic factors in both sectors. Investors should watch rural markets where demand recovery may offer growth opportunities for consumer goods companies. Housing sales in India witnessed a decline, with top Tier 2 cities reporting a 13% fall to 41,871 units during the third quarter of 2024. Factors attributed to this downturn include a large base effect and a drop in new supply. In particular, the West Zone dominated, contributing 72% of total sales. Despite this reduction, experts predict a stronger performance is on the horizon, particularly in the festive quarter. This anticipation is due to usual trends of increased buying activity during festivals. This slowdown could create buying opportunities for long-term investors with anticipation of recovery in the festive quarter. Emerging cities and towns, known as Tier 2 areas, in India are spearheading a surge in mobile data usage, according to a new study by Bernstein. The study reveals that per capita mobile data consumption in these regions has hit between 35 to 40 gigabytes per month, which is significantly higher by 30% compared to usage in metro areas. This demonstrates a rising trend towards digitalization and increasing demand for internet services beyond India's main metropolitan centers. The report illustrates a crucial shift in patterns of data usage and an expanding digital market in the nation's lesser-known areas. Growth in data consumption suggests potential for telecom and related sectors in India's Tier 2 regions. Amid political stability and strength in cotton garments, India is becoming the preferred source for the US apparel market. The increase in sourcing from India shows American buyers' confidence in the potential of the Indian market. The US is India's largest apparel export market, and this shift of preferences could strengthen India's position further. However, the Indian market continues to face issues such as high labor costs and limited production of man-made fibers, MMF. Despite these challenges, India aims to leverage its strengths and work on its weaknesses to increase its market share in the US. Investors in the apparel industry may consider India for potential long-term growth due to increased US demand. The company is working on an innovative tire technology that aims to reduce tire rolling resistance by 10% over the next 6 to 12 months. The store, Sivaramakrishnan V, has provided details to reporters about their current project, stating that a decrease in tires' rolling resistance will lead to increased vehicle efficiency. For instance, if a vehicle with these optimized tires could initially cover a distance of 100 kilometers, after the improvements, it can stretch to 110 kilometers. This highly anticipated reduction in rolling resistance signifies a significant step towards enhancing fuel efficiency and reducing overall travel costs. Improved fuel efficiency can result in increased demand for these tires, leading to higher revenues for the company. To comply with the upcoming liquidity coverage ratio, LCR, rules effective April 1, commercial banks are increasing their outflow rates on retail deposits. The new rules will necessitate a greater investment in high-quality liquid assets with the goal of reducing the risk of massive withdrawals. This regulation comes as a response to past banking crises, such as the Silicon Valley Bank collapse in the U.S., where a lack of liquid assets led to the bank's failure. By raising deposit rates, banks aim to attract more customers and subsequently secure more funds, improving their chances of meeting the liquidity requirements. Higher deposit rates might enhance banks' liquidity, potentially leading to a more secure investment for long-term investors. Bharti chairman, Sunil Mittal, in the NDTV World Summit, underscored the undeniable significance of satellite communications for connecting remote and traditional network disconnected areas globally. He spotlighted an approximate figure of 2 billion worldwide who still experience internet unavailability. Specifically in India, where 5% of the population suffers from connectivity issues, Mittal emphasized the potential improvement satellite technology can bring. He reported that 2 ground stations are currently ready, only awaiting government authorization for operation. This development underlines a potential leap in narrowing down the digital divide, especially aiding rural and underprivileged communities. Investors should note Bharti's potential growth from tapping into the underserviced market via satellite connectivity. Jawaharlal Nehru University, JNU, plans to install a 2000 kWp solar power plant aiming at yearly savings of around 3 crore rupees in electricity bills. By utilizing solar panels on building rooftops and available vacant areas, JNU is expecting significant cutbacks in energy expenses. The solar project, carrying a price tag between 10 rupees 12 crore, will be capable of producing 30 lakh units of electricity every year after its installation in the upcoming 6 months. This decisive move towards renewable energy is not only an economic decision but also reflects a sustainable approach to handling resources. Investors could consider solar panel suppliers or contractors involved in the project, which could gain from the growing trend of institutions switching to renewable energy sources. Tire manufacturing entity, SEAT, has announced plans to increase its production capacity of passenger car radial (PCR) tires at its Chennai facility. Currently, the plant manufactures 20,000 units daily. It now intends to boost production by 30% to 40% as part of a strategically planned capacity expansion, according to the company's representative, Banerjee. This move underscores SEAT's commitment to meeting growing demand and gaining a competitive edge within the tire industry. The ramp-up will be enabled by a significant project currently under progress. Increases in SEAT's manufacturing capacity may potentially benefit long-term investors through growth in earnings. In a move to enhance aviation security, there will be an escalation in passenger and cargo screenings, including secondary ladder point checks of hand luggage before boarding an aircraft. However, the elevated security measures balance this out with the introduction of sophisticated risk evaluation systems. These assessments aim to differentiate real threats from false alarms, thus avoiding unnecessary immediate landings. The objective of these nuanced security upgrades is twofold: achieving maximum security and minimum disruptions by allowing the aircrafts to continue their journey unless there is a credible threat. This is a general news that investors should just know. UCO Bank has reported a recovery of 414 crore rupees through the National Company Law Tribunal (NCLT) from 26 accounts in the second quarter. This recovery includes 393 crore rupees that has been resolved and 21 crore rupees that is currently under liquidation. Marking a significant improvement in asset quality, the bank's gross non-performing assets (NPA) ratio has witnessed a decrease, falling to 3.18% from the 4.14% recorded last year. Meanwhile, the bank has also observed a substantial growth in its business, with domestic advances increasing by 21.62% on a year-on-year basis. Successful recovery efforts and declining NPA indicate sound risk management, making UCO Bank potentially attractive for long-term investors. Indian pharmaceutical firms are significantly behind global counterparts in several key areas, according to a recent report. These areas include research development intensity, the proportion of employees with a PhD, and the number of patents and publications per billion USD of revenue. Global firms are reportedly producing a substantially higher number of patents and publications, reflecting the superior commitment to R&D and highlighting a potential area for improvement for Indian companies. This suggests potential growth areas for Indian pharmaceuticals if they can increase R&D and attract more PhD-level talent. The U.S. National Highway Traffic Safety Administration (NHTSA) is looking into potential defects in Tesla's full self-driving system, prompted by several crashes, one of them fatal. This inquiry focuses on the functionality of the autonomous driving system in low-visibility conditions. This setback comes alongside another scrutiny of driver engagement with Tesla's autopilot system. Collectively, both investigations cast doubt on the viability of Tesla's autonomous driving aspirations and potentially threaten future advancements and commercial rollouts. Investors should monitor this situation closely, as regulatory hurdles could hamper Tesla's autonomous vehicle development and affect long-term growth. Vikram Rai, CEO of GE Aerospace South Asia, expressed optimism for the future growth of India's civil aviation industry at the NDTV World Summit 2024. Rai showcased that presently, Indian Airlines operate a fleet of around 800 aircraft with an additional 1,200 units ordered. He also disclosed the company's ambitious plans for the design and development of aircraft engines, which are projected to offer a 20% improvement in efficiency. This leap in efficiency will not only revolutionize aviation performance but also contribute towards reducing carbon emissions. Rai's outlook signifies the significant potential of the Indian aviation market with increased demand for aircraft and innovative technology. This presents an opportunity for long-term investors betting on growth in the Indian aviation sector and advancements in aerospace technology. India's retail industry is undergoing significant transformation as quick commerce and online platforms rise in popularity. Traditional and modern trade practices are being challenged, and this paradigm shift is influencing retail giants like D-Mart. Despite reporting improved earnings, D-Mart continues to focus on physical store retailing and value propositions. Though this approach has worked in their favor so far, these brick-and-mortar stores are finding it increasingly difficult to navigate the market due to the ramped-up competition from burgeoning online platforms. It's crucial for D-Mart and other traditional retailers to evolve and adapt quickly to these changes to stay relevant and maintain market share in an increasingly digital retail landscape. This transition could impact D-Mart's future earnings if they don't adapt to the evolving retail landscape. India's state-run ONGC and BPCL are engaging in talks with Saudi Arabia's national oil company, Saudi Aramco, for a prospective partnership to establish new petroleum refineries in India. BPCL intends to set up a refinery in Andhra Pradesh while ONGC is contemplating sites in Gujarat or Uttar Pradesh. The projects, which require substantial international investment, are currently in the pre-feasibility study phase being carried out by Engineers India. These endeavors hold great potential in strengthening oil supply security in India while providing Saudi Aramco a strategic foothold in one of the fastest growing oil markets in the world. This partnership could enhance profits and growth for ONGC, BPCL, and Saudi Aramco, benefiting long-term investors. India's Prime Minister, Narendra Modi, has praised the UDAN scheme and its transformative impact on the country's aviation sector. Over the last 8 years, India has expanded its airports and air routes, demonstrating its dedication to enhancing aviation connectivity and passenger comfort. The scheme has made air travel affordable for over 1.5 crore passengers and has led to the operationalization of 86 aerodromes. This intensive expansion underscores the government's serious efforts in continuously improving the aviation sector. This progressive enhancement of India's aviation infrastructure indicates potential for growth in airline and related sectors. Ultratech Cements envisions growth of 7 to 8% in volume in the upcoming years, driven by accelerating government infrastructure spending and urban housing demand. The company is expanding its manufacturing capacity to match the increasing domestic cement market. This optimistic business projection, however, is contrasted by the company's 36% plunge in net profit for the quarter ending September 2024, falling short of anticipated figures. Ultratech's future performance would largely rely on the success of its expansion strategy and the persisting strength of market demand. The predicted volume growth and potential upside from increased infrastructure spending present potential long-term profit opportunities. The beloved detective series Adrian Monk, which first graced U.S. television networks, is being adopted into its first Asian iteration. The popular show, noted for its central character's battle with obsessive-compulsive disorder, OCD, while working within the San Francisco Police Department, brings a unique flavor of crime-solving drama to audiences worldwide. While the detective adeptly handles complex and peculiar cases, he continues his struggle with his wife's unresolved homicide. This marks a noteworthy cultural adaptation of Western television content for the Asian market. This is a general news that investors should just know. In a recent development, Tata Motors has secured an order from Uttar Pradesh, UP, State Road Transport Corporation to supply 1,000 diesel bus chassis. This contract was won by Tata following a competitive bidding process. The delivery of these units will be executed in stages, further building on Tata Motors' previous successful delivery of 1,350 units which are already operational. This deal marks another big stride in Tata Motors' commercial vehicle business in India, indicating a sturdy market foothold. This deal signifies steady demand for Tata Motors vehicles, indicating potential for increased revenues and profitability. Reliance Retail's Azote has demonstrated its dedication to market expansion by launching 12 new stores in key cities across India, which include Bangalore, Jaipur, and Udaipur. This move is instrumental in reaching new markets and enhancing the customer base. It shows a valuable commitment on part of AZORTE to establishing a stronger offline footprint, indicating a strategic focus on both online and offline retail platforms. The expansion in various urban locales enhances accessibility for customers and opens up potential growth prospects for the company. Long-term investors could view AZORTE's offline expansion as a strategic move towards diversified customer reach, indicative of sustainable growth. Banking and venture capital veteran Ghosh, with over 30 years of industry experience, has been appointed as a group president for Yes Bank. He initiated his professional journey back in 1993 and spent a decade with prestigious institutions such as ICICI, Reliance and Rabo India. His wide-ranging financial and corporate sector know-how amassed through various senior positions has made him a significant asset in the industry. With a deep understanding of banking, corporate financing, and venture capital, Ghosh is expected to bring a wealth of knowledge and strategic leadership to his new role at Yes Bank. Ghosh's appointment could potentially drive strategic decisions at Yes Bank, impacting its long-term growth. Thank you for watching today's video. If this information adds value to your investment journey, please consider subscribing and hitting the bell icon for notifications for regular updates. Liking and sharing this video will help us grow, and we'd love it if you could also recommend Investment News Roundup to your friends and family. We'll be back with more updates in our next video. See you soon.